My next guest says the markets are staying in a trading range right now, and that 1150 would be the high end for the S&P. We're joined now by John O'Donohue. He's the head of equities at Cowen Co. John, good to see you again. It's been a while.
Hey, Betty, how are you?
Good. And, I want to start off with what's going on right now in the futures this morning. On the back of that late day rally we saw on Friday, are you getting any sense, John, even though we're in a trading range, that we may be slowly creeping out of that fear may be abating in these markets?
Yeah, I think there's a couple of things. One is post the flash crash on May 6th, I think there was a lot less participation in the market because of the fear of the structure itself that something like this may happen again, and the fact that we have sort of circuit breakers put in place in unison, I think, has added a little bit more stability to the structure. Away from that, we also have an interesting technical aspect to the end of this week, which is a quadruple witch. And what we saw exhibited, I think, as the market corrected down to this 1050 level in the S&P, was that there was tremendous amount of support based on the fact that we had a large put-call ratio, which meant that actually, as we get down to that level, it creates buyers. So you've had a couple of things that have sort of added some stability to the marketplace, along with, stability overseas, whether it's the euro sort of stabilizing here at 120, and less sort of cataclysmic news coming out despite what we see about BP.
John, it's John Erlichman. But what about another potential stabilizer? We just said CVS announced a big stock buyback program, the second big one we've heard today. Companies are sitting on a lot of cash, and you would expect at a certain point they'd want to put some of that cash to work. Does that factor into the thinking in the market?
Absolutely. There's three things that can happen with a lot of cash on the balance sheet. One, obviously can be used to buy back their own stock. Two, it can be either used to issue a new dividend or increase the dividend, which a lot of companies do. And three, which is also a potential, is it can be used to go buy something else, whether that's M&A or a private company or whatnot. So I think, we've seen a lot of the doomsayers out there talk a lot about what could happen and, gold going whatever. But I think the U.S. corporate balance sheets, in as good a shape as it's been probably since 1982, 83, with all this cash laying around. So something has got to be done with it.
So then, John, why aren't you bullish? I mean, you're just neutral right now.
Well, I'm quite neutral, yeah, because I do think, I think what we're going to get to is a price of kind of fair valuation here, which may be 1150, 1200 in the S&Ps. What would drive me to become more bullish, I would guess, is if we had another correction down to sort of below 1050 in the S&Ps. But being neutral, I guess, is probably the easy way out. You sit on the fence here for a while, but I'm not negative if that helps you in any way at all. I do think, well, I do think that until we get the employment numbers back, until we start to see job creation, what I call the velocity of money, which is the velocity of money through the system, meaning some growth back into the system, won't happen. So I think we need to see job creation before I get more bullish.